I'm going to talk about demystifying your financial position, and I'm going to walk you through an instant profit assessment for your bridal shop and give you the tool to do that. So we're going to talk about what is your financial position? How well do you understand your financial position? Why is it hard to start with just your financial statements and puzzle through those financial statements? How profit assessments provide greater financial clarity, and how to do an instant profit assessment for your bridal shop. Again, I'm going to give you the tool to do that. And do you have the numbers and what to do if you don't? So we're going to get to the section on how to do instant profit assessments. But if you want to grab that tool, there is a link for it in the comments below. But before we jump in to how to do a profit assessment, I want to give you some context so that you understand that. So first, let's talk about what is financial position. So I'm going to throw a definition in here from one of my favorite accountants. He does a lot of education on accounting for accountants, Stephen Bragg. And he says the current balances of recorded assets, liability, and equity accounts of an organization. That defines your financial position. So that's great. You can find that on your balance sheet. And that is a true statement of what your financial position is. But how well do you understand your shop's financial position? So probably a lot of you have access to that information in your financial statements. But what I find when I start to ask folks this questions about financial position or understanding about financial position, cash flow, things like that, is that there is some confusion and there's kind of a range of answers that people give. So the first set of people say something like this: I monitor my financial statements regularly and understand how they relate to my profitability and ability to grow the business. So what does this mean? This means you have your financial statements, you're looking at your financial statements regularly, and you're able to interpret those financial statements and make something out of them. So if this is you, when we do this profit assessment, this instant assessment, this is going to help you take that to the next level. And the way that it's going to help you take it to the next level is that you're going to be able to take that information that you're already getting from your financials, plug it into this instant assessment, and then be a bit more efficient in how you are understanding your financial position, and then take that information to make better business decisions. What I would like to do is, as I'm asking these questions, I would love to hear from you which of these you relate to, and then comment in leave a comment below, and I will answer these. I'll respond back. We can connect on this. The next set of people say something like this: I have a general sense of income and expenses, but there's room to improve. So common that business owners understand, about how much you're making, sales, you're tuned into the sales and you have a pretty good idea of where the expenses are going, but maybe you don't totally understand the profitability, and you're not necessarily connecting dots between your P&L, your income statement, your balance sheet. You don't know how debt fits in. You don't know your assets and liabilities and basically how that fits in. And you're not really able to take that financial information and use it to make good business decisions. So you don't have a lot of confidence there. And so the next category of people that I talk to say, I track sales, but I'm fuzzy on the rest. Okay, so you have a really good idea of how many sales are coming in the door, because that is the most important thing in your business. Is you're getting sales coming in, right? But the next step is understanding expenses, profitability, because yes, sales are so important, But in order to really build a business that's going to thrive and be sustainable over time, there's so much more that you can learn so that you can build, so that you're not just spending money to make money, or even worse, spending money to lose money. And so there can be things that are invisible to you, that you don't know. You could even be running your business at a deficit and not know it until it's too late. And so the next thing is, honestly, I could use help. And that's okay. You know, any of these things are okay because there's a next step that you can take in order to take yourself to the next level. So if you answered one of these top two, what that means is that you can take this instant assessment, you can take those numbers that you have, and you can start plugging them in right now and make use of this instant assessment. If you are one of these second two that you don't really have your numbers in the books, I would still like you to keep watching and learning, because you can get a sense of what is possible when you take your next step is going to be to get your books in order, to get good financials so that you can start plugging this in. This is going to be a second or third step that you can do the instant assessment, but your first most critical step is just to get good books so that you can make better business decisions and get that sustainable, profitable, sustainable business that where you have the confidence that you really know what is going on under the hood. Okay, so I'd love for you to comment. And then also, when you use this profit assessment, if it made an impact for you, in terms of, did you better understand your financial position after using this profit assessment? Why or why not? You know, was there what allowed you to take it to the next level? And if you didn't, what was blocking you? And I'm going to talk at the end about how we might be able to help you with that. So let's talk about why it's hard to start with just your financial statements. Now, I don't want you to get me wrong. Financial statements are absolutely essential. This is what we do for our clients. We make sure that you have good financial statements. But why is it going to be hard for you to start with just your financial statements? If you're trying to pull together, and this is just for the average business owner, okay? And this is, of course, an accountant can look at the financial statements and interpret them, but you, as an average bridal shop owner, it may be a little bit trickier to pull that information together. So your financials, when viewed individually, don't tell the whole story. So by individually, this is what I mean. Your profit and loss tells you how much profit you earned, that bottom line profit, how much profit you earned over a given period of time. So over the course of a year, or over the course of a month, or even over the course of a quarter. So that's just one piece there. And a lot of people stop there. They say, oh, hey, I earned X number of, or my profit and loss says I earned X number of dollars last year. That doesn't make any sense to me because I don't see that money in the bank. Well, the reason that it doesn't make sense to you is that there's other activity happening on your balance sheet that you're not taking into account. And so what we want to do is see the full picture. Your balance sheet gives you a snapshot. It's a moment in time, a snapshot of your assets, liabilities, and equity. Assets are what you own, and liabilities are what you owe. Equity is your equity in business, what you own at a given point in time. So let's talk about how profit assessments provide greater financial clarity. So the profit assessment that I do for my clients is a little bit more in depth. So what I'm giving you is a simplified version, but a profit assessment pulls your financials together to give you a big picture summary. It combines your past, your present, and your future. That's how I like to think about it, or that's kind of the simple way that I like to describe it. And a profit assessment reveals whether your business is operating at a surplus or a deficit when taking both assets and liabilities into account. So when I say that your profit assessment is combining your past and your present and your future, what I mean by that is as a bridal shop, you are taking your deposits in advance. Your customer deposits, you're taking those in advance, right? So that's a future liability. You are also paying off debt that maybe you accrued debt for expenses that you paid in the past. We're also looking at the present. What is your profit that you're making in the present, in the current day? And so those are things that you might not be considering when you're thinking about your day-to-day business. So we want to combine those also, that we're looking at them together to understand how your business is currently operating, not just that profit line on your P&L. And so we're combining basically the elements of your balance sheet and your P&L, so that we can, in a simplified, kind of easy, intuitive way, so that we can understand that past, present, and future, in order to understand whether your business is operating at a surplus or deficit, taking into account both those assets, so say the money in the bank and the liabilities into account. Let's talk about how to do an instant profit assessment for your bridal shop. I'm so excited to give this to you. Like I said, it's a simplified version of what I do for my clients on my own. And if you haven't done so yet, download that instant assessment tool from BridalVision Financial. And what I would recommend is just follow along with me for now, get everything conceptually, then go back and start trying to plug in those numbers for your shop. And then you can just come back, rewatch this video while you're trying to plug in the numbers, so that you can pause, rewind, do whatever you need to do, go back and forth in the video in order to plug in those numbers, okay? So what are we going to do this profit assessment for your bridal shop? You can enter your financial data, and that is going to include total cash on hand, data from your P&L, and data from your balance sheet. And this is going to be to understand how money is currently allocated across your business, your surplus or deficit, and if you do have a deficit, your runway. So what I mean by runway is the time to draw down cash if you have a deficit. So let's see what that looks like. When you enter your data from your financials, this is what that is going to be. I'm going to talk you through how to enter your data. So when you look at that tool that you download, and you're going to have two links. Number one, we're going to have a view only link as an example. The second link is going to be where you can make a copy of that sheet, and then you can enter your own data. Okay, so when you enter your own data, all of the pink cells are where you can enter your data. Everything else is calculations. So you only want to enter your data into the pink cells. This first one, where it says enter total cash on hand from all business bank accounts. And that's where you're just going to enter what is the total balance from your business bank accounts. So let's say you have 6 bank accounts. Just add those up and then enter the total balance from all of those accounts. This is a simplified version of the profit assessment that I do for my clients. So I'm trying to limit the number of inputs that you put in here, and make it instant, make it super easy for you. So this is the total amount of the cash on hand from all accounts. Then we move down to top line revenue here. So what I mean by top line revenue, this is going to be the total revenue, all the money that you took in deposits. And you want this to be on a cash basis, not an accrual basis. This is important because I'm not going to get too much into the details here, but we're basically accounting for anything that you would do in accrual adjustments. We're accounting for it in other places, okay? So just take my word for it. You want this to be on a cash basis, all of your deposits. If you can't see this in your financials, let's say you have a bookkeeper or an accountant that is adjusting your books to accrual and hasn't broken out your cash revenue, then you will want to go to BridalLive and run your report in BridalLive, the payments report, and you can get your total top line revenue there. assuming that um, all of your deposits are running through Bridal. That's one way to do it. And then something to consider is actually having those as separate lines in your financials. So for all of our clients, we show both cash and accrual revenue, which is super helpful for so many reasons. Not going to get into it in this video, but maybe we can talk about it another time. And then we have sales tax paid here. So that's all the sales tax that you paid. And then we have where we're seeing inventory. We have two lines for that if you have the information that you're able to break out. And it's nice to be able to see that breakout of both customer orders and sample inventory. If you don't, just put everything that you spent on both cost of goods or customer orders and sample inventory onto one line and put 0 into the other one. And so you're going to see customer orders, everything you spent on those customer orders, or another way to think about it is cost of goods, and then sample inventory on the second line. And then if you have alterations, or if there's some other kind of contract or other kind of business line that you're running through where it's direct costs, you can use that. But I put alterations in here because that is the most common, the kind of one of the most common cases that we're going to see. So you're going to enter all these costs before we get to real revenue here. And you can think of real revenue. It's a close cousin of gross profit, but it is the real revenue that you're making in your business, because there's no way that you can operate your business without paying for these costs. And we can argue that you could reduce some of these, but you can't operate your business without paying for these things. So just reiterating, you're going to enter your financial info from the last 12 months to get to your real revenue. So revenue does not count as real until after you have paid sales tax, paid for your merchandise, and paid for your samples. You know this, but sometimes in our heads, we're counting the top line revenue as the real revenue. So it's really helpful. You get a lot of clarity when you can see these buckets, when you can see it spelled out, and when you actually then see that real revenue number. And I'm going to show you how helpful that can be in a minute. So then the question is, are you spending more than you make? So what we are going to do is allocate your current expenses across your business. And then if your expenses are greater than 100% of your real revenue, you're operating at a deficit. If your expenses are less than 100%, then you're operating at a surplus. We all know this is, are you spending more than you make? That's not a new concept. But what this tool is going to help you do is it's going to help you do the calculations. So let's go back to our tool and see how this is done. Here is the sum of allocated real revenue. You already plugged your numbers in here. Okay, and then this is going to add up your current allocation percentages. This is a profit first term, so this isn't a profit first talk, so I'm not going to get into it, but if they sound familiar, that's why. So we're adding up your current allocation percentages to get to the sum of your allocated real revenue. In this case, this is 125%. So if you are spending more than 100% of real revenue, you're operating at a deficit. And you can see your annual and monthly deficit calculation here. Your deficit can be masked until it's too late by upfront deposits or cash reserves from prior periods. So when you think about it, those deposits that you are taking from your brides, those can mask if you are operating at a deficit. Those can mask that, and you can be not feeling that pain for a while. Or let's say you have cash reserves. Those can come from loans that you've taken out. They can come from infusions from, say, family members, contributions from family members that are trying to help you out. Well, those can disguise the fact that maybe you're not doing so well. So you just want to be careful with that. And what this profit assessment can do for you is to help you understand where you are in your financial position so that you're not needlessly drawing down those reserves, or that if you are drawing those reserves, you're being very deliberate about it. You're doing it for a purpose. You're doing it to leverage profit. Now, your runway calculation here shows how many months, if you do have a reserve, how many months until your cash on hand is depleted if nothing changes. So looking at this case here, this store is running at a deficit of, their sum of their allocated revenue is 125%. And they have a monthly deficit of $8,500. That means that they're spending $8,500 more per month than they're bringing in. And if they continue as they're going, they are going to run out of money in 18 months. Now, what this means is, like, does that absolutely need to happen? No, it just means they have some decisions to make. So that they can not run out of money, so that they can, there's all kinds of decisions that they can make, all kinds of actions they can take between now and 18 months from now. So what about targets? So there are target allocation percentages. So we talked about your current allocation percentages. How are you allocating your money across your business right now, present day? But what about the future? What are you aiming towards? There are target allocation percentages for every revenue bracket. It can take time to reach these target allocation percentages, and it can take effort. But how do you reach them? You can reach your target allocation percentages by cutting unnecessary expenses. If you have expenses that you incurred years ago that are no longer serving you, you want to cut those. We call it cut the fat, not the muscle. Okay, you don't want to cut the muscle of your business. If you have great salespeople that are bringing in revenue, you don't want to cut those. You don't want to cut things that are generating revenue, reducing costs that are crucial for operations, because that's just going to cut your revenue. But you do want to cut expenses that are not necessary. You can also reach your tops by increasing sales. I'm not telling you anything that you don't know, but sometimes it does help to repeat things that you do know. And then you can reach your tops by increasing gross profit margins. So what about targets? You will see target allocations based on the real revenue of your bridal shop. So whatever you're seeing in your model, somebody else in a different revenue bracket could be seeing different target allocations. If your revenue changes from this year to next year, those target allocation percentages, those could change. So these are the percentages that you're aiming for, but they take time and effort. You're not going to magically reach them by just sitting on your hands. When you do this instant assessment, this is giving you information. This is giving you information that you can use to make better business decisions. Those decisions require action and effort. They require setting goals and moving towards those goals decisively. This column shows what your dollar allocations would look like if you were currently allocating based on your TAPs. The further you are from your TAPs, the more unreasonable these dollar amounts are going to feel. You are not going to be able to just instantly move from where you are today to your target allocation percentages just by wishing it were so. So, but it's helpful to know where are you now? Where do you want to be? Where's the gap? So that you can think about, what are the actions that I want to take to get there? The bleed is the difference between your current allocations and your target allocations. The fix is the action that you need to take. These are stated very simply: increase dollar spend as a percentage of revenue, or decrease dollar spend as a percentage of revenue. But really, the actions that you take are much more nuanced than this. So I made this profit assessment super easy. The question for you is, do you have the numbers? We talked about this earlier. If you have great numbers, it's going to be relatively easy for you to plug them in and just start thinking about how to move forward. And this is going to be a tool that's going to be useful for you. It's going to make things more efficient for you. But if you don't have the numbers, it might be a little bit more of a challenge for you to take that next step. Good bookkeeping is necessary to assess profitability. So your QuickBooks should be accurate and up to date. If it's not, that needs to be your next step if you're starting to think about this and if you're feeling like this is a roadblock for you. So I want to talk about how we can help. We have office hours, usually just for our clients, but if you're watching this and you feel like you want to have a conversation, get in, talk about the instant assessment, maybe you tried out the tool and you have a few questions, I just want to invite you to join our next office hours. As of the time that I'm doing this video, we're doing those first Thursday of the month at 2 o'clock. So if you're interested, just drop a comment and we can give you the link to our next office hours. The other thing that you can do if you want to find out more about us is just schedule a discovery call, and we'll drop the link in the comments so that you can have access to that as well. So any of those, if you feel like you need a little bit more support on this. Thanks so much for joining me for demystifying your financial position and walking through this instant profit assessment for your bridal shop. I would love to hear how this worked for you, if it worked, how it made a difference for you. If you got stuck, I would love to hear that as well. Just drop it in the comments. Be sure to hit subscribe and like this video if you want to see more like this, and I will see you in the next one.